Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week of November 6th. Oh boy, this week we really reap and skyrocket higher. And you may be wondering why all this happened. We got some economic data to background to sustain that, but the key is to perform technical analysis. Because technical analysis sometimes, a lot of times, provides you with insight from the markets that tell you the details of what big money is doing. And we are going to focus today in what big money did and how they did it in order to trap all the shorts on Thursday with a big sell-off on Powell's comments on the Treasury auction failure that we are going to explain. And also on Friday, everyone was trying to look for continuation and we exploded. I'm going to provide the reasons why I think all this happened. But first, as always, we are going to start with economic data for the week. Then we are going to review earnings. We are going to review the interest rate probabilities and some information regarding the selling of treasuries that the Federal Reserve has stopped doing this week. So a lot of details and information for you to be prepared for next week. So we start as always with economic data. We have all this week a lot of Fed stocks. We are not going to review what all of them said, but we are going to review the most important one. We got Powell speaking on Wednesday and on Thursday. On Thursday, it's when the market sold off. Why? So basically because Jerome Powell said, we are not confident that we have achieved such a stance in reference to the monetary policy that they want to be to fight inflation. He doesn't think that the interest rates are high enough. And that's why the market sold off. And also, the most important thing that I think you already suffered and saw in the charts, this 30-year bond action. What happened? Basically, the US government tried to borrow 24 billion by selling 30-year debt. What happened? Well, the rate had to dramatically increase because there were no one buying. They wanted higher interest rates to basically buy US debt. And the last resource, the last buyer that they have to buy, only bought 25% of the debt. No one, China, Japan, Saudi Arabia, Russia, none of them were buying our debt. What's the issue then? Well, the US government is borrowing more than ever, 1.5 trillion in the past 4 months, and the outlook is another 1.5 trillion in the next 6 months. You know the issue, right? You know the issue, right? This is a big issue. Big issue. That failed at 1 p.m. We are going to see that on the charts. And then Jerome Powell put the last nail in the coffin, saying that maybe he thinks that this stance on monetary policy is not enough. They might continue raising rates. That's what happened on Thursday. And then on Friday, we got also bad news from the consumer sentiment. We got way lower than expected sentiment. We got higher than expected, higher than the previous one, 5-year inflation expectations. And also the general inflation expectations is 4.4, not 4.2. And consumer expectations, it's way lower than expected. It's true, some people are saying that this is a preliminary reading, but this is not looking good because consumer sentiment and consumer expectation really affect the inflation per se. and also how they spend money. And they are saying, we don't think prices are right, and we don't think we are going to buy. So a lot of bearish info this week. But despite that, market continue rallying. We are going to review that in the charts. Let's continue with earnings real quick. Disney with Disney Plus is crashing in numbers. They added 7 million subscribers in Disney Plus to reach the total number of 150 million worldwide. That's unbelievable. So despite the hikes in prices, they continue adding subscribing. People are paying. This is really good for the stakeholders, but it's really bad for consumers, for us. More than that, the CEO, Bob Iger, is there to really cut expenses and increase revenue and margin. And they are doing that by implementing more cost-cutting measures and adding 2 billion to the target 7.5 billion in expenditures costs. So more aggressive cutting and more aggressive hiking. That is going to increase their margins, their revenue, and also the earnings. So that's why investors are really pushing Disney. Let's talk now about interest rates. Also, real quick, we are still thinking that we reach the peak at 525, 550 until June next year, in which we are going to aggressively cut. The Fed has said that they don't think there will be cuts this soon. But again, market, it's already thinking about that. It's expecting something. If it doesn't happen, then we will have a problem. But right now, we are living with these expectations. And the expectations say that they, they are going to cut 3 times, 75 basis points to reach 450 at the end of the year. That's the expectations. No more rate hikes. That's the first thing. And starting to cut at June. Pay attention to that, because if this changes, maybe the sentiment in the market will change also. And we are going in a rocket right now until the end of the year to reach maybe all-time highs. We are quite bullish. So what is happening that with the treasuries, with all these auctions that this was a fail? What is happening with the Fed? So basically, they are, all this year, they are in quantitative tightening. This is basically selling, removing money from the markets due to overheating economy. This is basically the inflation in prices. And how they do that? So they do that by selling treasuries or letting them mature. So they sell and sell and sell and sell and sell. And this is a tracker of the Federal Reserve that tracks the holdings of securities from the Federal Reserve. And let's review from September. This is all the securities that the Federal Reserve already holds. And look at the last row, change from prior week. This is a number negative, and this is thousands. So this is basically 18 billion, minus 18 billion. So they are selling securities in September. The next week, this is week by week on Thursdays. Next week, minus 6, selling. Next week, negative, minus 26, selling. And they continue selling, minus 17. These are billions of treasuries, billions of bonds, notes, bills, mortgages-backed securities. These are huge. Okay, so let's see. Last week, minus 40 billion. And what happened this week? Oh, 25 100,000 in the positive. So they did not sell this week through the rally. They are most probably inflowing. They are putting liquidity on the market. So this is another thing why markets did skyrocket with this additional liquidity from the Federal Reserve and the additional stop in the selling of the securities from the Federal Reserve. This is really, really important. This is the context. This is the under the curtain things that they are doing. So now that we explain everything fundamentally, now let's talk big and let's talk about technical analysis. This is the Nasdaq. The Nasdaq weekly chart. Last week, big time. And I was saying, we are approaching this descending resistance that everyone is looking. Everyone has this line in their charts. What happened? We had also this zone of resistance, this level, horizontal level, at 15,407. We obviously broke that. But the weekly shows you the strength of the move. It was not as strong as last week, but we did go through that resistance. In the daily, we can see the magic that they did last week. They prepared all these last week. I said 1, 2, 3, 4, 5, 6, and 7 days of straight move up means a lot. The open interest, which is the contracts that remain open in the futures contract in NQ, increased by more than 100,000 throughout the last week. So they are adding money. From where? Most probably from the Federal Reserve, but they are putting a lot of money into tech. After they got a lot of good prices down here, they are basically pouring money into Nasdaq. That's the first thing that you have to understand. Watching the open interest in the Nasdaq. And then in the daily, you have to really see the gaps. Do you see this gap on the downward move and then the upward move that got destroyed in one candle? You usually see a move up and then a move down, a rejection, and then this move down is not as low. We can establish something and then we go through the gap. Well, so this fair value gap got destroyed. And then we continue putting higher. Okay, now we are bullish. Let's see if this gap that we are putting gap after gap, basically that gap was below discount. So if we are here, discount is below the 50% fee retracement, and we check this gap is below that. So this is a bullish gap. Fair value gap on the daily. So this gap never got filled. And more than that, we continue moving higher. So basically what they were doing, they were just pushing and pushing and pushing. And you have to watch, we watch this pivot, we retraced here and we continue moving with another green candle. No pullbacks. This rally was insane. And when you have this kind of move after breaking down, touching a critical level, the 200 moving average, and then exploding in a rally with high open interest, well, I marked this pivot. I was going to buy every dip above this level, and I did. I was buying every dip this week. And on Thursday, I managed my risk. I lost a little bit of money. I think it was 500, something like that. But on Friday, I was 2,500. So, I mean, this is a really interesting move to take your opportunity. And I want you now to focus on what happened during the up move and this kind of pivot. The 4 on this main pivot. And then please watch this fair value gap that we got on the daily. This one. I'm going to mark that. This can move here. So because this fair value gap was the main reason they push up here. To feel this imbalance on the daily, we got also some imbalances on the 4-hour chart that we already filled on Thursday sell-off. And if this is basically Thursday's sell-off, look at this. This gap was filled. This micro gap was filled. So every move up was filling and invalidating these fair value gaps from Thursday. So basically, they are telling you, this is no more. You have to be prepared for a bull run to hunt this pivot and the high of the range. And which is the high of the range? In the daily, we got this high and this fair value gap on the daily. So those two were the target. If we go to the 30-minute chart, look at this. There were no gaps on the 30-minute chart. They did the sell-off quite precisely, with quite a lot of precision. No more, but the 1 hour did have a gap. So once we feel this, oh boy, look at this candle. Look at this candle putting again price into the fair value gap and preparing for a move up here. Once we cross this level, I was quite sure that they were going to explode just Thursday's high. They were going to hunt this, and the range between this and the pivots on the daily and the fair value gap were so close that they were going to hunt all these people. So fair value gap in the 1 hour chart and no in the 30-minute chart was quite a detail. And finally, where do you enter this? Where do you think, okay, just Thursday's sell-off. So basically we have, this is the daily range. This is the Thursday's sell-off. We got, this is the sell-off on the 30-year bond action at 1 p.m. Then we try to move higher, but then Jerome Powell crashes everyone and we close on the lows. Really bearish day. But look at what happened. Let's focus on overnight price action. I usually trade London Open. London Open is right here at 3. Sorry, that's not 3. It's here at 3. So in the night, so we establish a pre-market low, and then I start watching London Open at 3, seeing that it wants higher. It wants higher, but we have this 30-minute resistance. This 30-minute resistance basically is this level that I don't think we were going to break, and then we got this. So 2 horizontal levels, business as usual during overnight, just watching horizontally. And look what they did, because this is really interesting. From the London Open, from the people that were super bullish, we open London here. They couldn't continue higher, and we start losing settlement and a lot of levels. We broke down, we retested, and we failed. So you don't have to touch this breakdown. You have to see when you see a bounce and a real push. So this dot line is the pre-market low. They went down here and they put a nice bounce. For now, it's still retesting levels. And I was watching this low and this pre-market low to see when we do things like this. Down. So approaching, hunting, and bouncing. You want to trade this. And look what happened. Look at this. They push down, touch, squeeze, hunt all these stops, and they continue higher. And if you watch this, you basically can see that we have a fair value gap here that's bearish. So you have that destroyed in this move up, and then you have your fair value gap bullish from the lows of overnight. You have this gap that was perfectly accepted. So in this case, you wait for this break and you take a long right here. If you take a long down here, oh boy, you have a really huge day. But at least you know, if you don't take this trade, at least you know that the price action now, it's quite bullish. And you keep tracking of these fair value gaps. So what you can see, this is during overnight. Look at this move. With this fair value gap being respected and then the high of the overnight being destroyed like this, you have to be bullish on the day. So now your question is, until when? What is your target? No one was expecting, at least I was expecting that, but I was confident at an extent, but I was watching the price action. When I was really confident, I told you, on the 30-minute chart were a lot of details. This level was my main level horizontally, but the 1 hour gap that we got here was my main reason. So once we try to fill that here, so let's mark that. Bear with me, boys. We are getting there. This is the 4 hour fair value gap. Let's see that on the 1 minute chart. The 1 minute chart, we have this gap right at the open. So let's see what they did. Open, move lower, and they start squeezing. They tested the fair value gap the first time and it got rejected. We held the low of day and we started here, down here, accumulating and moving higher. So what might be your entry? Because your target is to close a candle, a 1 hour candle. That was 1 hour, right? It's 1 hour, not 4 hour. So your focus needs to be to track fair value gaps. Look at this. There's no gap in here. So you have no bearish structure. What you have though, it's, for example, fair value gaps in the 1 minute. So you have this one, and you also have this one bearish. So once this candle closes above this fair value gap, you invalidate your bearish sentiment and you start looking for this. This fair value gap held, and then you have your breakout structure and your long here for a move higher. Your stop is really tight, really down here. We don't have to move down here if the fair value gap is being respected. So there was my entry. It was, let me check. It was 373. So basically here. I was long here. And where was my target? My stop was down here. so around 30 points. My target was, I told you, I was pretty confident that we were going to hunt this stop. So yesterday's high. Let's do that. Let's mark the long from the 73s, 71s, okay. My stop was down here and my target was the high of the day. That's a 1 to 3, 3 to 1 risk reward ratio. Pretty nice, right? So I added up here in this bull flag for the break of the rejection of the fair value gap on the 1 hour. And I took one out up here, as I was saying, my plan, following my plan, and the other one was the runner. The runner was for here. These 4 point, and they wanted liquidity up here. What was that then? That was the first blue line. The second blue line is the second extension through the fair value gap up here. So the first one is the pivot, and the second one is the extension through the fair value gap on the daily. And look at that. They hunted that, and they hunted the other one, second one. So pretty big. They continue higher. Let's do some cleanup here. Bear with me 1 minute. So this one is gone, and we have this one. Let's put it that with a dash line, with a dotted line, and then the main one. We have the main one on the daily. So on the 1 hour, we got this. This is coming from the daily, and we basically skyrocket through it. And look at this. On the 1 minute, we got this dot line that was the pivot. So that was my first target, and the second target was this one. So there are okay. So they basically pushed everyone out. This move is insane, but has a reason. You might have some sentiment up here, bearish sentiment, but you have to read price action and you have to see what kind of invalidations they are doing. And if they start pushing candle after candle after candle, and you reach this chart, the 1 hour chart with this gap, and what they did, you basically can just remove your bearish bias and try to get into the train. And we have our opportunities down here. We have our fair value gaps being respected, and also gaps below. And look at the 45 EMA. This is just a lot of gaps were being left without any kind of continuation. This is one gap, another gap here. This one is pretty beautiful because look at this, from the lows, from this push basically to this, we are not at discount. We should have waited for at least this, but look at the strength of this, just tapping and continuing, consolidating and continuing, consolidating and continuing. This is just unbelievable strength. They were rushing and crashing all the shorts yesterday, all day until the close. So this is my explanation on the technical side. I was really bearish after seeing, for example, this kind of move after London Open, but you have to adjust your bias and see the details. And the detail for me was this swipe of the pre-market low and then a move, a big retracement higher. And after that, it was just send it. skyrocketing since then. Look at this. Since my entry low there, I didn't take it. I just was scalping up down here. But let me just show you the kind of move that you can do with this analysis. Since there at the high of the day, that's 236 points. That's insane. Insane. And then more and more and more. Obviously, you don't get all the move, but I try to explain you why I was bearish really early and then I switch when they did this. And I was trying to find a good entry, and the 1 hour chart and the fair value rejection of this bearish fair value, we rejected that and I took this one. That was beautiful. That was my trade. So now that we explain you why, obviously I'm not going to review all the charts on the individual tech stocks, but let me tell you that all are breaking out. Apple is breaking out, Microsoft at all-time highs at 397 with a 2.50% day. Tesla lagging behind due to some concerns regarding the strikes that might be happening at Tesla also. Amazon, look at this. Big move. Google, big move. Entering the gap again. Nvidia, it's looking for all-time highs. So be aware of that. And Meta, also big move at November 2021 levels. So big moves across the board. What is, now that we have this field, what is my target? Well, now if we look to the left, what do we have? This is a very interesting target, but I'm pretty interested in this kind of resistance up here. So this resistance is quite huge because we rejected big time on the number 2. We might see some kind of resistance here at the entering, and that's 15,700. I think we are going to see continuation. Until when? I think our super target should be this for next week. I don't think we are going to do this directly. If we do that, we have to adjust in lower time frames, not the daily, because the daily tells you that be careful with this. But we might do also things like this, because I still think, I told you last week on the recap, 16,000 into the end of the year. I was super sure about that. You can review my weekly recap from last Saturday. I told you that. And I think I'm going to put here when I told you that in the video. So here it is. This is my forecast for November. After this squeeze and the amount and the volume that is coming in from everyone, from short-term investors to intraday traders to investors, swing traders, big money is coming in, and we failed 4 times. But let me tell you, I think with this increase, look below 200 support, big push, squeezing all shorts. Oh boy, we need to be patient to find a proper entry or the big squeeze into the end of the year. This is my forecast. A big squeeze into the end of the year to, who knows, 16,000. So as you can see, the 16,000 is still my target. The daily chart does not provide you with a lot of information, but in the 4-hour chart, we have this. So we have this fair value gap here that is not yet filled, and this is bearish. So my main target is to see if this fair value gap gets filled, and if then gets filled, they are hunting this high. They want the liquidity up here. And then once we reach and we swipe this liquidity, we might reassess. But this is my target for next week. Continue pushing higher the 4-hour. So we have little room to push. We need to close above, not a wick. We need to close. We need a close up here. So once we close out on the 4-hour fair value gap, I can see some extension higher towards this kind of liquidity up here. And if they swipe this, it may retrace and continue or just skyrocket. So that's my plan. Don't be bearish. Trust me, this is too much of liquidity inflow, Federal Reserve support, a lot of open interest. I mean, they were preparing that during all this time. And do you think they are going to stop with this? No. They want this. 16,000 might be dangerous, might be quite hard, but I think Nasdaq is ready to really push and squeeze to unbelievable levels this year. Last thing I want to mention, dollar is weak. Dollar got a move down, a retrace back, and I think it's going to continue lower. So dollar is weak. Yields are still pushing higher. This is the 2-year. But if we see yields pulling back again, dollar pulling back, the 10-year is also trying to squeeze higher, but we have this level, 4.6. If we see yields pulling back and dollar pulling back, don't watch the Nasdaq. Watch small caps. Small caps continue being the lagger. This was the move down that last week. So it was not super strong as the Nasdaq and the S&Ps. We were down 3% last week. So we need small caps to gather some more strength and continue higher. We have this gap. Let me adjust real quick this. We have this gap to be filled. We can do that for sure. But watch 3 things. First thing, the dollar. Second thing, the yields. And the third thing, small caps. If those 3 continue pushing, the dollar pushing down with yields and the small caps filling this gap, filling this imbalance, and then trying to move higher, then you can search for the setup that I told you on the Nasdaq. Be prepared for the 4-hour fair value gap, and if that rejects, if that goes through, then you can look for a trade towards the graph on liquidity at 15,845. That's my expectation. But I told you, this was a move that was going to be huge. It was huge. And the cherry on top was the bear trap. Oh boy, that was insane. So I think we covered everything. There's, as always, a lot of information in these videos, but if you pay attention, you may learn a lot of things and you will apply a lot of setups and might find a lot of opportunities for next week. These videos aim to be useful for you, to teach you some things, and I want to share my understanding with you for you to be a better trader and to read better the markets. And right now the markets are very bullish. So don't be fool and try to short this up here. If we push this 4-hour fair value gap, I mean, the Nasdaq will continue like a train. Don't step in front of this train. Please, just take your opportunities to move with the market. And that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload videos like these, weekly recaps on Saturdays every week. And every single day on trading days, I upload videos also for market forecast, market updates, and market recaps. So stay tuned to the channel. Thank you for the support. And remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend and see you on Monday.